Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be talking about Tattooed Chef and specifically about their Q3 earnings that are coming up. Now this is the first time that I'm talking about them on the channel and I will follow up with a full detailed due diligence video in due course. However, given the time critical nature of this video, I'm uploading this first. On Monday the 9th of November they're expected to release their Q3 earnings and this video is all about an analysis around that and around what we already know about those Q3 revenues. If you're new to the channel and you like investor related content, then smash that subscribe button. Please smash the like button if you like detailed stock analysis videos like this. I'm not a financial advisor, this video is purely for educational and entertainment purposes only. However, I feel like this is really important in this video, given that I am sharing my own analysis, which is a function of the assumptions which I've made. Before you make any investment, always do your own research, always do your own diligence, and make sure you know everything about the company. With that being said, let's get straight into it. Now on Monday the 9th of November, Tattooed Chef is going to announce their Q3 earnings, and this video is all around some analysis which I've done on the revenue figure which we already know, and what that means for valuation and the share price going forward. A couple of weeks ago, Tattooed Chef released a press release in which they announced their preliminary Q3 revenues. They stated expected revenues for Q3 of around $41 million, which represented a 71% growth on the same Q3 period in 2019. Now in this video I'm going to do a detailed overview of what I've done in my analysis. However, if you don't want to stick around for that, if you just want the highlights, here they are. Based on what we know already, Tattooed Chef is quite likely to beat the overall forecast that we know for 2020 from the investor presentation. Perhaps by around 10% on a revenue basis and perhaps even up to 27% on an EBITDA basis. I caveat this by saying this is all a function of the assumptions I've made in my own analysis. However, the outperformance they've delivered to date is good and should be reflected in the share price growing. If you're of the belief that Tattooed Chef should be valued on an EV sales multiple much closer to that of Beyond Meat, for example, then the share price should be around $46.50 or a 137% increase on where it is now. However, if you believe the share price is worth a slight discount to that of Beyond Meat but still a premium to where it's currently trading, you could take an average of the EV revenue multiples for Beyond Meat, Fresh Pet and Vital Farms, and that would imply a share price valuation of just over $36 or an 85% growth on where it currently is. I'm now going to go into the detail, so if you're not interested in that, then feel free to skip to the end. However, I do cover a couple of things which I think investors in Tattooed Chef should be really interested in, so I recommend sticking around. I do try and keep the analysis as simple and explain it step by step as much as possible. However, if anything doesn't make sense or you don't understand something, please let me know in the comment section below. I'll be delighted to explain it and help you understand it more. I'm now going to talk about the key assumptions in the model before running through the key outputs. So for Q3 2020, we've assumed the same EBITDA margins that the business has delivered in H1 of 2020, that is 13.3%, and this implies for Q3 an EBITDA of 5.4 million on the basis of the revenue figure we already know. Now, using 2019 as a base, H1 typically has a lower EBITDA margin than H2, so perhaps in this case that's quite conservative. However, this is clearly just an assumption, and new products the company may have released may mean that there's a reliance on new ingredients that may impact the business's seasonality, so again, this is a big assumption here. Now, in the investor presentation, they outlined expected revenues for 2020 of $148 million, and they forecast EBITDA of around $17 million. Now, to hit this on a revenue basis, Q4 would need to deliver $39.1 million in sales. This would actually represent the lowest quarter-on-quarter growth for any quarter in FY20, so that feels quite achievable. To hit the EBITDA projection, it would only need to deliver 2.6 million of EBITDA in Q4, and again, this seems pretty achievable. Looking at 2019 as the base again, Q4 was the quarter with the largest sales too, so again, this perhaps is fairly conservative. Now for Q4, if we assume that the growth rate is the same as the average growth of each of the other quarters in 2020, this would imply a Q4 revenue of $53.4 million. When we total this for the full year, that's an outperformance on a revenue basis versus the investor presentation of $14 million or around 10%. That in itself is great and really should be positive for the valuation. If we then assume the same 13.3% EBITDA margin that we discussed previously, this would imply a Q4 EBITDA of around $7.1 million. Now, if we sum that for the full year, that implies an outperformance on an EBITDA basis versus the investor presentation of $4.5 million or around 27%. Again, that's great news and should be positive for the share price. Now the next step is to understand what this means for valuation. Now we know that management have forecast growth of 40% in revenue from 20 to 21 based on their investor presentation, and so if we conservatively assume this remains true rather than any further outperformance, for example, what that implies is a new revenue for FY21 of around $243.4 million. Now, valuing Tattooed Chef at the same EV sales multiple as Beyond Meat would imply a valuation of just less than $3 billion on an EV basis, which equates to a share price of $46.47, or a growth of around 137% from where it currently is. If you don't feel that the Beyond Meat multiple is justifiable, perhaps because of the IP, Then you could use an average of the Beyond Meat multiple, the Freshpet and the Vital Farms multiple, which would give you an EV of just under $2.4 billion and which implies a share price of $36.34, or an 85% growth on where it currently is. Now obviously this is all done on an EV sales multiple basis because that's where the least number of assumptions have been made. However, when we know what the EBITDA figures are when they release their earnings, I'll update this analysis, which should give us a better idea of where the valuation may lie. With that all being said, one thing that this does ignore is the risks that the company faces and the potential risks to the valuation. Now, I will do a more detailed due diligence video on this, where I address all those topics and address the risks and the key mitigants I see against those. For me, currently the key areas to consider are the fact that it is a premium price product. That means it sits more within discretionary expenditure than traditional consumer staples may do. And as we enter a period of economic slowdown and potential recession, what does that mean for demand going forward? Ultimately, a decrease in demand will mean a decrease in revenue. How defensively positioned is the proposition? Are there barriers to entry? Is there a moat? Or is there IP that protects the business and also commands a premium valuation? We also need to think about the cost base and the potential impact that the ongoing health crisis is having on companies' cost bases. We have seen a number of companies in their earnings releases report decreased expenses, particularly in the travel and entertainment expenditure lines. What we want to make sure we understand is that this is not being artificially inflated and that perhaps long-term real margins may be lower than this. However, I will address all of those in due course in my detailed due diligence video, which I'm working on currently. Thank you so much for watching. I hope you enjoyed it. If you did, please smash the like button. It's so helpful in pushing the channel to a wider audience. If you're not already subscribed, then smash that subscribe button. And as always, please let me know your thoughts and comments in the comment section below. I really enjoy hearing everyone's perspectives and thoughts. It's so interesting. So thank you so much for watching, and I'll see you in another video.